Donald Trump just told Americans to buy stocks now. He's confident the economy is about to skyrocket. But should you listen? Or is this just political hype? Let's break it down, from Trump's timing to the role of the Federal Reserve and what it really means for your money. In a recent statement, President Donald Trump encouraged investors and everyday Americans to buy stocks now, predicting a wave of economic growth. This isn't the first time he's made such claims, and the last time he did, the market did jump nearly 10%. So, should you follow his advice? In this video, we'll explore why Trump is saying this now, the real story behind that previous stock market rally, what the Federal Reserve has to do with it, and whether you should actually be investing right now. Let's dive in. Donald Trump has always been bullish on the US stock market, especially when it reflects positively on his economic leadership. Recently, he said the time is now to get in the market because he believes major economic growth is coming. His type of messaging plays well politically, but it also influences public sentiment in the markets. And interestingly, this isn't the first time he said something like this. About a month ago, Trump made a similar prediction, and just days later, a 90-day pause on tariffs was announced between the US and China. What happened next? The stock market surged nearly 10% in a matter of weeks. Was it Trump's call that did it? Not exactly. The policy shift on tariffs was the real driver, and it shows how market rallies often depend on political moves. So when Trump says buy now, it might not be about fundamentals, but about anticipating future headlines. While presidential statements can sway short-term sentiment, long-term market performance depends on macroeconomic factors. One of the biggest? Interest rates. And that brings us to the Federal Reserve, the most important player in the economy you probably never vote for. The Federal Reserve, or the Fed, is the United States central bank. But here's what most people don't realize. It's not part of the government. It doesn't print money directly. And it does control interest rates, which affect everything from your mortgage to your 401k. When the Fed raises rates, it becomes more expensive to borrow money. When it cuts rates, businesses and consumers are encouraged to spend and invest more. So what's the Fed doing right now? Even with signs of slowing growth, the Federal Reserve is holding off on cutting interest rates. Why? Because of two major concerns. Tariffs. These are taxes on imported goods that can increase prices. Inflation. The Fed doesn't want to stimulate spending if prices are already too high. Cutting rates now could fuel runaway inflation, which hurts everyday consumers. So while Trump wants to project optimism, the Fed is signaling caution. It's the big question, should you be buying stocks now? Here is a balanced view. If you're investing for the long term, you're diversifying across sectors. You understand the risks and aren't chasing hype. No, if you're expecting quick profits based on Trump's statements, you're unclear on how interest rates may impact your portfolio. You're reacting emotionally instead of planning strategically. Remember, the stock market is not a casino. It's a wealth-building tool when used wisely. So what are experienced investors doing right now? Watching Federal Reserve updates closely. Staying diversified in ETFs and index funds. Holding some cash to buy during market dips. Avoiding the trap of political noise and focusing on fundamentals. Trump's words might spark momentum, but the real gains happen with smart, patient investing. So is Trump right? Is now the time to buy stocks? Maybe, but only if you're doing it for the right reasons, not because a politician told you to. Okay, watch the market and invest with strategy, not emotion. What do you think? Is Trump helping or hyping? Let us know in the comments.
Please like, share, and subscribe the channel US Versity for more videos like this. Thanks for watching.